Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. We operate out of Silicon Valley, but we work with entrepreneurs all around the world, as you will see later today. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. In support of that mission, we do these roundtables as well as a lot of work behind the scenes with our premium members. Of the free public roundtables, this is the 283rd session. It started way back in 2008 when my first book was coming out, and we just started experimenting with this format. And, clearly it was an effective format, and we used to get a lot done, and we're still getting a lot done. So it's been really wonderful to work with all of you from all over the world. We've had way over 30,000 people participate in these sessions at this point, and thousands of entrepreneurs have pitched. The event is being recorded. If you're live tweeting the show today, please use hashtag 1M1M. And our Twitter handles are at 1M by 1M and at Romana. You'll find a lot of interesting content through both channels, so please feel free to engage with those handles. And the recordings of all prior sessions as well as other content are available on our YouTube channel, which is 1M1M Roundtables. This session, when the recording is ready, is also going to be on that channel. These are the call-in instructions. This is a roundtable, so we would like you to call in and participate and engage and so forth. I'll put this slide up later on in the program when we are ready for open discussions. Right now, we're going to start with the mentoring session. Before we dive in, though, we are just about a week away from the Oracle 1M1M application deadline. So, as you know, some of you, that Oracle and 1 Million by 1 Million has been partnering for 4 years now almost, and we run intrapreneurship challenges 2 to 3 times a year inside of Oracle, and the fall session is currently on, and we will be looking for your applications shortly. So be sure to go to the link that's on your screen and fill out the application, and stay tuned. We'll be announcing the results on November 19th, I think. Okay. We are going to get going with the entrepreneur pitches. Now, before we get going, I want to set some expectations. To all of our presenters today, I want you to know that we are on your side. 1 Million by 1 Million has no other agenda but to support entrepreneurs. We want you to succeed. We know you're doing your best, but most likely this is your first venture, which is why you're here and you're trying to leverage the resources that we provide. Because of the experience that we have accumulated here in the program, it could very well be that we know a few things, few tricks of how to accelerate your journey, and we would try to share that with you and give you suggestions and advice and so forth. All businesses face tons of challenges, so because you are facing challenges does not mean that you do not have the potential to succeed. As you are going through the session with us today, it is possible that you might disagree with my feedback. Don't feel bad about that. You need to decide what feedback you will take, what feedback you will incorporate into your strategy, and what feedback you're going to discard. So that really is up to you. I will do my best to give you honest, direct feedback. That is my commitment to you. I am not going to try to tell you something that you want to hear or that will make you feel good. That's not why we're here. It's a working session. We're here because we want you to make progress. You are here because you want to make progress. One thing I want to caution all of you on is not all businesses can raise money, and raising money doesn't guarantee success. Not all businesses should raise money. That's the other thing that you should remember. So fundraising is not necessarily, entrepreneurship does not equal fundraising. Please do not operate under that misconception that the media has propagated out into the world. We are here to work on your business. Doing something worthwhile is hard, but completely worth it. So even if your beginning seems like a uphill climb, please stay with it. Try to run the marathon, not the sprint. Pace yourself. And if you are resilient, if you are willing to run that marathon, the chances of your being able to create something worthwhile is very high. If you give up, of course, that's the end, and some people have to give up for various reasons. That's a different discussion. If you're not pitching today, please also participate in the public chat. Ask questions or call in. When I turn the call-in line on, you can call in and discuss. Asking good questions and engaging with the program is how you're going to learn the most. Even if you're not pitching today with slides, just doing a quick elevator pitch and getting feedback from the community here, getting feedback from me, from the entrepreneurs in the room, will be helpful, and it's good practice to be able to do elevator pitches on the fly, on the elevator, right? So we sometimes play these games of fine-tuning elevator pitches here in the session. We'll see how much time we have, and if there is time and if there are people who want to play, maybe we'll play. Anyway, let's get to work and see what all we can get done today. We're going to start with Nirav Jain from Gurgaon, India, cityfurnish.com, furniture rental. Please, Nirav, if you could unmute your line and tell us what you're working on, that would be great.
Hi, Sharona. Thanks for introducing me. Hi, guys. My name is Nirav Jain. I'm the founder of Cityfurnish.com. I would like you to imagine a world where people don't need to buy furniture, but they could rent furniture or better subscribe for furniture. Thanks for changing the slide. So the basic pain problems, the pain points which we are addressing by the concept which we introduced are the basic hassles of the price which the consumer has to pay today to buy furniture. The buying of furniture also creates a hassle of moving into the furniture, and as you move along to a different city, you have to move the furniture along with you. The alternatives for our services currently do not exist as of now in India. They do exist in America by the name of cost. And the biggest problem, again, the last one, is the reselling of furniture is a huge stress for those customers who are shifting and moving around towards a different area in the country. Next slide, please. We have a very simple solution to a very basic fundamental problem. We have created an online platform where we can deliver furniture packages at your doorstep by enabling you to save your time and save money at the same time. Our solution and the delivery concept is again a one-stop services, so that the pain involved in searching for cheap furniture is gone away, and we provide a really amazing alternative to buying second-hand furniture. So instead of buying second-hand furniture, people can now rent furniture through our platform. Next slide, please. So the market size for our venture is currently very huge. So starting from the total furniture market size of 90 billion in the global industry, we are targeting 5 billion out of this pie currently for the Indian and Middle Eastern market in the next 3 years. Next slide, please. So for the market validation, we are relying on these 3 basic points. First would be that the increase in furniture rental and pay-per-use services has been increased by up to 250%. The second case is to imagine if you've been earning $100,000 from 5 years before now, and if you're earning the same amount today, you'll be spending around 7% of your annual income to buy furniture, and before 10 years you'll be spending 2% of the same amount. So there's a considerable gap which we are trying to exploit and bringing in our services to help the final user. The third is the lifestyle trend which the users are trying to get into to accept and change their furniture outlook as more as a necessity rather than towards a lifestyle trend and a lifestyle commodity. Next slide, please.
So I want to ask you a couple of questions before you move to the next slide, Nirav. In the previous slides, actually 2 slides back, you talked a lot about cheap furniture. So obviously the demographic you're going after cares about cheap furniture. Then you're talking about lifestyle trend and more of the taste and fashion and so forth. What is the intersection of those two trends, or those two demographics, those two psychographics rather even?
A very good question. So our basic value proposition is that we are not the most cheapest cheapest rental agency in the market. We are trying to be the most valuable rental agency in the market. So when I say there is no alternative for cheap furniture, I'm talking about the perception of the customers as they are looking for a cheaper alternative when they're moving to a new city. And because our service, if it's not available, they go for an alternative way, they buy cheap furniture because they cannot go for renting furniture because that's not available in India. So when we come up with the concept of a rental furniture, we're trying to come up with something which is above the market, so it's not very cheap furniture, but it is something which provides some value addition to the customer's home. But again, at the same time, because it's in a rental model, so it's become accessible to them. I hope I am able to clarify your doubt on that.
Yes, you are, but I think, the thing that will impact what you're saying is the market size of $5 billion that you're quoting here. The $5 million is not a blanket market, right? There are subsegments within that $5 billion, and you have to decide which subsegment are you going after. If you're going after the cheapest, that's one part of that $5 billion. If you're going for some mid-market range and you differentiated with style and design and so forth, that's a different segment. And however, that's a sliver of that segment. It's not the entire $5 billion. So your TAM is not $5 billion. Your TAM is a piece of the $5 billion, and you need to call out what is that piece.
Again, I would just like to interrupt and answer your question. So basically what we are creating is again a marketplace in the lease and rental industry. We have gotten huge vendors from India who are currently on board, and they are providing us goods on a lease basis, and then we are subleasing it to our final consumer. And when we are working across these models, the price points and the ranges are fixed by the vendors and customers. So on the basis of the demand and supply, these prices will be fixed, and automatically they will be modified to cater to the demand and supply, the supply elasticity. So we are not fixing the price point. The vendor fixes the price point according to the demand.
I'm not talking about price point. I'm talking about market size.
Definitely. If you would be saying that if you're targeting the cheap and cheap alternative or the luxury alternative, so we'll be targeting. It's kind of again an Amazon approach where you can find the cheap stuff also and the valuable stuff also. So
you do not find the valuable stuff in Amazon. You find cheap stuff in Amazon. You don't find valuable stuff in Amazon. No designer, no high-end designer sells on Amazon.
Definitely. When I say value, it's more of utility rather than Italian sofa.
That's my point. So if you're within that, my point is within that $5 billion market that you're positioning here, you need to find what is your real positioning. In consumer businesses, which customer you're going after determines everything.
Definitely, that's true.
Okay, please keep going.
Yeah, carrying on with this. So our product is a very simple mechanism where we can, let's say, final user can select the furniture packages online through our website, get it delivered and installed by our team, and then by very easy and flexible payment options, they can either do a recurring payment where they do not have to log in again and pay monthly rental, or if they want to switch the cards or to, switch the payment channels, they can log into our website and pay monthly installments. Next slide, please. So our business model depends again on the model where we will be charging a percentage on the vendor's price. So currently we have been targeting around and working around these price points. So we'll be charging around 7% to 5.5 to 4.9, depending on the rental tenure of the packages which we'll be letting out. Depending on these market sizes, we'll be targeting around 3 million packages within for the upcoming 3 years, for 2015 to 18, and looking for a revenue of about $165 million for the Indian and the Middle Eastern market, which we'll be targeting after 2016.
So what you have provided so far is a top-down market. This 5 billion, even if you take 5 billion, and I'm calling out that your 5 billion is not the market that you're going after. You're going after a smaller number in here. Let's say you're going after 1.5 billion as a top line number. Your market is actually 5 to 7% of that 1.5 billion. 5 billion is not your market. 1.5 billion is not your market. Your market, the business that you are building, the revenue potential of the business that you're building is 5 to 7% of the 5 to 1.5 billion, 5 billion, whatever is the number that you arrive at after your segmentation and positioning is your actual market size. So don't get misled by these numbers. You're not working on a $5 billion market opportunity.
I think there's a difference between the revenue which we'll be targeting and the gross value of the merchandise we'll be selling.
No, the TAM, total available market, Nirav, is what is the total scope of the market of the business that you are building. I'm not talking about revenue projections. I'm talking about total available revenue in that market based on your business model. That's what bottom-up TAM analysis is, and that is the only number that matters in this context.
So we have taken down the approach of the complete rental industry within the 3 years will be valued at around 20 billion, and we'll be targeting a projection of 5 billion in growth industry.
And that is a wrong assumption. That's what I'm telling you. It's a wrong assumption.
We'll try to.
You may not like to hear it, but in the way we do business, in the startup world, the way we do business, your assumption is the wrong assumption.
Definitely, and I love to hear my negative and constructive criticism. Anyway, starting again with the presentation. So the market acceptance and the models we will be building upon depends on the 3 main fundamental building stones. So these are the B2B, B2C market segments. Along with that, we are more focused on alliances and partnerships within this industry segment. So in the B2B segment, currently we are working a lot in the hospitality sector. We've been working with OYO and showrooms in India, and we are doing monthly rentals of 300 and 350 plus rentals. Apart from that, we are working with developers and real estate developers in India. Naming a few would be dealers. In the B2C, we will be targeting the business expats who are traveling to India. Along with that, a lot of medical tourism is happening in and around Delhi NCR region, which we are again targeting and focusing on. Similarly, we have created strong linkages and partnerships within the industry. One of the biggest tie-ups we have currently is with the Embassy of Netherlands, where we kind of are incubated in Utrecht University. So along with these linkages and partnerships, we are trying to expand our model again in India. Next slide, please.
So, Nirav, what is your core market penetration strategy? This is like a Chinese menu of different things that you plan to do, but a small company doesn't have time or resources to do all of these. What if you were to pick one core strategy based on which you're going to really crack the market open? What is that strategy?
Again, to correct you, we are not a small company as of now. We are a team of 11 people with 3 co-founders. We are already doing 600 rentals per month. In our team is divided into segments, in which 2 segments are basically for B2B segments in the hospitality, and another is in the development and real estate agencies. In the B2C, currently we are focusing on creating linkages and alliances within the industry to focus on that. So currently our go-to market, which we said to target the cookie monster, is the B2B and B2C market. But to play it in the smart way, we are creating more linkages and alliances along with it, so that we do not do a lot of cash burn on Facebook and online promotion. Rather than we have linkages and partnerships to support us in our growth propelling.
I don't think you're very interested in my feedback, so I'll just let you finish your presentation and move on.
So in our competition analysis, one of the biggest competition which we have, and it's honored to have, is COT, which is backed by Warren Buffett, one of the richest one. It's very easier for a customer to rent furniture from COT, but they're very expensive, and they do not do inter-country rental as of now. In the Indian competitive market, they have Furlenco and Rentomojo competing again with our market, but their model and customer segment is differentiated from us. And again, in the pain of existing customers, they do not facilitate online payment and transaction, which we have helped in creating in Cityfurnish, which helps in creating the affordability and also helps in the ease of furniture rental as well. Next slide, please. Yeah. So one of the last slides would be the competitive advantage. The major advantage which we have over the other competitive landscape right now is the major advantage is the ease of use. Again, the domain experience of being 5 years in the industry helps to understand the customer and market segment, and is also helping us in creating linkages and partnerships within the industry. We have been creating a new market front data advantage. No one has heard about a rental marketplace within India. So this is the first kind of concept which we are creating in India. Again, the building of affordability and flexibility has helped us to create and develop our customer segment. Last slide, please. So this is the current core team. I am Neerav Jain, I am the founder. Harsh Mehta is the CTO, he runs the technical landscape. We have got some feedback and advice from Jitendra Gupta. He was on board as an investor and as an angel investor as well. That would be it.
Okay. All right. Well, as I said, I don't know that you really want feedback, so we've listened to your presentation, and I've given you some feedback already. If you have any questions, feel free to ask. Otherwise, we'll move on to the next presenter.
I would definitely like to know. I'm really open to constructive criticism, but I'd like to defend my point as well. I hope I did not want to insult you or anything. Sorry for that.
No, I think you're overestimating your market size, and if your goal is to raise a lot of venture financing for this business, your TAM model is wrong. So somebody who understands market sizing will see through that and will catch you on that. So that, for me, I have no axe to grind, right? I don't have any other agenda but to give you constructive feedback. What is my point of, why would I want to engage with you here if my agenda is not to give you constructive feedback, right?
Well, definitely, that's very true. And
why do you think we are doing 283 sessions of this if my agenda is not to give you constructive feedback?
No, that's definitely true.
So my assessment of your business is you're probably looking at a top line market of 1.5 billion, and at 5 to 7% of that, you're looking at a total available market for your business model of about $50 to $70 million. That's my assessment.
Okay, and what would be your comments on our go-to segments, and that as our team is also catering to B2B and B2C segments, so in our strategy?
Well, I think if I were you, you immediately got defensive and made the statement that you're a very large company, you're not a small company. You're a tiny company. 11 people is a tiny company, okay? And you have very limited resources.
I just said that we are not a small company because it's just not a team of 2, and I consider every person in our company as very valuable.
11 people company is a tiny company. Take it from me. 11 people is not a big company. Please, don't make me laugh. So given that, and you have limited budgets, the most important thing is you don't have millions of dollars of marketing budget. So the question is, how are you going to get to revenue in a reasonable way and efficient, capital efficient way that will get you to, build a sustainable business? And so if I were you, I would pick, maybe you're experimenting right now with all these different strategies. Figure out which one is sticking. You said you have already 600 rentals. Well, what are the segments where you're getting the maximum number of rentals? Which of these go-to-market strategies is yielding the maximum, conversions? And there I would...
The maximum rental that you are getting is the hospitality sector and the B2B sector.
Hospitality. Well, then focus, double down on hospitality and build up the hospitality sector. Figure out what is required to do lead generation in the hospitality sector, and there are some advantages to that. To building a B2B business, it's more, you know, the deal sizes are larger. You can do higher touch selling, and you know, maybe that's your starting point, and maybe for the, you know, next, you know, 12, 18, 24 months, you build several $1 million worth of revenue just based on the hospitality sector, and really, you know, really leverage that your, you know, traction in that segment. That's what I would do, and that's how small companies mitigate, you know, lack of resources to building sustainable businesses. There is a very, very famous book by Jeffrey Moore called Crossing the Chasm. And there's, if you haven't read it, you should read it, all of you. It's an excellent book. It's an old book, actually. It came out, if I'm not mistaken, it came out in the early 90s, but it is a classic, and it's one of the best books in terms of go-to-market strategies, and it has this concept of beachhead. And you need to have a go-to-market strategy that gets you to a segment and establish a beachhead that, you know, for any small company, resource-contained small company, choosing a segment and choosing a segment-specific go-to-market strategy is a tried and true method of building a business. That's how numerous businesses have been built. So if you decide that that's not the strategy you want to follow, that's your choice. All I'm telling you is this is not something I'm inventing on the fly on, you know, November 5th, 2015. This is tried and true strategy that is, people have already leveraged and succeeded with.
So I have another one of the very biggest questions we have. Is it advisable to be a B2B facing startup in the current market scenario, or is it advisable to focus on a B2C segment also? Because a lot of advice I have gotten from the kind of VC funds in India, they said you have to be a B2C facing company to raise funds and explore, and to become a large company, you need to be a B2C facing company, or you just stick to the B2B segment and be a tiny company.
So I think there is a very actually astute decision making that you're going to have to make here. If you want to be a venture funded e-commerce, B2C e-commerce company in India, that's one strategy. The problem with for you to follow that strategy is that you don't have enough total available market to support a venture funded e-commerce business here. My guess is, can you please go on mute, whoever is interrupting the call? So given that situation, you will most likely, this is my assessment, you will most likely have to bootstrap this business maybe with small amounts of capital, maybe from friends and family, maybe from an angel investor or two. But you're looking at a far less capital-intensive business building process, and in that case, typically, B2B businesses work much better. That's my answer to your question. Now, you may not like this answer because your goal in life may be to build a venture-funded B2C e-commerce company. Well, then you're working on the wrong business. This business is not going to scale to be a B2C e-commerce company unless you manufacture your own furniture and you do this rental business and whatever, but with your own furniture. If you're working on a commission business model, this is not going to have enough time to do it.
But again, sorry to interrupt you again on the misquoting. We are not trying to build up a venture-funded company. We are trying to build up, like at least I'm trying to build it as a successful business company, which is required, will generate venture capital, when required. And currently, as you mentioned it very correctly, that if we are trying to be a B2B facing company, we may not require a lot of funding from a VC, and we can still be bootstrapped and build a successful business around it.
So, my strategy with most companies is you want to ensure survival and sustainability first. So if B2B allows you to become a sustainable company, profitable company in relatively short order, why not follow that strategy, especially since you have a validated market segment where you are getting traction? Then execute on that segment and blow it out.
Sure. We are trying to focus on that only, and currently all our marketing and promotion expenditure is also targeting generating new leads to the hospitality sector to propel our growth in that segment.
That's perfect. Then you're on track. Good luck.
Thank you.
You're welcome. Maureen, where are we going next? So Altin Beck, Orum Bayev, and Mikhail Morigin.
Yeah.
Hi.
Actually, Mikhail has some problems with connecting, but he is connecting now, so I'll start the presentation.
Go ahead.
Okay, and another thing is actually, Mikhail is a business guy, and I'm a tech guy in this project, and if he won't be able to connect, I will do my best. So, this is our project, Leprechaun Brace. It's a new, fast, and reliable method of fixing the bone fractures. So we are a group of students from Kazakh British Technical University. Professor Rameshkini is our mentor for this project. Okay, so can we go to the next slides? Yeah. So we found out that there are more than 6 million bone fractures of upper limbs in Central Asia, and most of them, about 30% of them, have a risk of complications because of removing cast ahead of time. Next slide. So on this slide, you can see that our solution consists of 3 parts. Yes, actually, it's a hardware-software system. So we have a 3D scanner. We have a special software for editing the scan of the fracture of the patient's upper limbs. So, and a 3D printer. Okay, so here's the technology.
So can you explain the technology a bit more? Exactly what's happening here? These are 3 components. How does the solution flow?
Actually, next slide is explaining this. The previous slide is just what consists of.
Sure.
Okay. So, firstly, when the patients come with his fracture to the clinic, and if clinic has some agreement with our service, so we provide a scanner software. So the doctor takes a 3D scan of the patient's arm. After that, he uploads this model to a web server. We download this model, applying some customizations, some custom color, custom design, and about 24 hours later, it actually depends on the type of the cast. The patient received his 3D printed cast. It depends on the type of the fracture. If it's fracture of an upper limb and it's, kind of a huge.
So what you're printing what you're 3D printing is the cast.
Yeah, we are printing the cast.
Okay.
That is customized for the exact patient. So, and here you can see that we have several types of fixation. It's hard and the middle fixation. So hard fixation is an arm brace, and the middle fixation is for like small fractures. It's wrist brace and the finger brace. And we're also using this PLA filament that is eco-friendly, ecological material for 3D printing. Can be easily recycled. So on this table, you can see competitors. So we took as the first main competitor is a pharmacy solutions. So the standard gypsum cast, and the average price for such gypsum cast is about $80. So it's very heavy. If the patient is using this cast, it's really hard to, it itches, smells, different kind of complications. Another competitor is Draft Print. Is a company from Russia, from Moscow. So they have a service for printing the casts, but actually you can see the price, and they don't provide any additional applications. So in talking about the Replicon brace, we are developing two kinds of software. So one application for an iPhone and one application for an iPad. So for an iPad, we're using the structure sensor. So it's a portable sensor that can be easily applied on the camera of the iPad, and the doctor can scan the fracture of patient. And the next application is a brace companion. It's for monitoring your status, and so yeah.
I'm sorry, you're not telling me what slide you're on, so I'm kind of trying to guess where to go with your slides.
Yeah, sorry.
Is this where you were?
Didn't so that we will have problem with connecting. Me and Michael have several parts in this. Okay, so yeah, that's the full value proposition. You can see the advantages of 3D printed cast. It's lightweight, comfortable, skin is free. Yeah, that's the price list. So we position ourselves as a B2B project. So our customers is patients, and our clients is private clinics, mostly private clinics, because in Kazakhstan we have about 3,000 clinics, and we are targeting on that 5–10% amount from total amount of clinics, which is the private clinics. And we actually talked with several doctors from private clinics, and they were interested in use of such kind of technologies.
So I have a few questions here. Let's stay on the customer slide for a second. You said there are 3,000 private clinics in Kazakhstan. How many of these clinics have you talked to in trying to validate this concept?
So actually, we started in the beginning of this year as a student project. So at that time, we didn't have enough time and resources to contact all clinics. So actually, we talked with several doctors from one major private clinic in Kazakhstan. It has a network, kind of a network of clinics around Kazakhstan.
Okay. So that's one of the things that you need to do. What are you selling? Are you selling the 3D printing solution, the software ensemble, or are you actually selling the casts? What are you selling?
So the basic idea is that clinic can request a 3D printer if they don't have such kind of equipment. So if they have agreement with us, we provide them a 3D scanner. They scan the fractures using our software, upload this model to the website, and we are working with the customization of the cast. And we will have kind of a delivery service of the gypsum. We'll deliver the gypsum to the clinic, but in future we are planning to implement the service inside the clinic, because it's really hard for a patient to wait because he have a fracture until this thing will be printed. So I think
so that's a very different business. The business that you talked about here is selling casts or selling braces. Whereas if you're going to sell the whole equipment and software and hardware, that's a very different business, and you're basically then asking the clinics to go ahead and do the printing, then who's going to do all the technicalities of doing this work, the printing, so that every unit is going to require a technician inside of the clinic to run this system. So that's a very different business than providing braces and casts. And you have to make up your mind which business do you want to be, and you have to make up your mind in the context of your conversations with the clinics themselves. Are the clinics even interested in having these units inside their offices? I'm not sure they do, because, you know, again, that will require additional staff, additional expertise, and so on and so forth, and they may not want it. They may just want to buy casts from you, and if the patient has to wait a day, a patient has to wait a day, and you have to probably provide a, you know, 24-hour delivery or something like that, that allows them to, you know, do what they need to do in a time-sensitive manner. So these are questions that I believe that you're going to need to go really sit down with these clinics and talk to them and understand what is comfortable for them, what is a minimum or what is a maximum time delay that they can sustain in receiving your braces and casts and so forth. And of course, the business model is going to be very different. Selling braces is one business model, selling units is a whole different business model. And then the other area that you need to explore is, you know, if you were trying to do something like this in the United States, there is a lot of FDA regulations. You have to get FDA approvals and so on and so forth. Now, what is the situation in Kazakhstan? Is that something?
Yeah, we also have such problems. So when we talk with that doctors from private clinics, so he said that he don't have any problems with implementing such kind of service, but the only thing that we need is to show this medical certification that this cast is not
and how long does it take to get the approval?
It's about a year, because I've heard that in Kazakhstan we don't have problems with implementing this, standardizing this standard gypsum cast. So
have you filed for the approval?
At this point of time, no, we don't have. We haven't started this process yet.
So if you decide that you want to do this, you should go ahead and file for the approvals as soon as possible, so that the clock starts ticking and that process gets going while you're sorting out the business issues. Then the two processes can run in parallel, and you know, you can start doing your validation work with clinics and figuring out your business model, and you have a learning curve basically as a business to climb, but you can climb that you know, learning curve in parallel with going through the approval process, because that's a time that probably cannot be compressed. It's a systemic time lag that you're going to have to sustain as a medical device company. Okay, so that's my feedback. It looks like you've had a bunch of awards and so forth, so that's wonderful. Congratulations, and it looks like you have an interesting idea here. So I think the next step for you is, one, to start the process of the approvals, and two, figure out the business strategy, and we'll be happy to help you further with the business strategy if you decide to do that in the context of the 1M1M program.
Okay, so yeah, that was the last slide. Yeah.
All right. Well, good luck, and
okay. Thanks for your
keep
feedback.
Going. You're welcome. Jai McLaughlin, you're up next.
Hi, good morning, attendees, panelists, and host. My name is Jay.
Morning.
I'm from New York. Hello?
Yes, please go ahead.
The name of this is called Shop For Me. It's an online crowdfunding marketplace which introduces e-commerce, shopping, and merchant partnerships. and Bitcoin. And the whole point of this is to complete the cohesive process to C2C, B2C, B2B, and with the opportunity to grow up economies and to fulfill social responsibilities. Next.
So, Jai, I'm going to give you a little bit of feedback on that first slide.
Okay.
I did not understand what you're doing. And when you have someone listening to you,
okay,
with your first slide, you do not want to leave them. You don't want them to leave this first slide when you have said all these things. You've said a mouthful of stuff, and I understood nothing. That's not the way you want to leave this. So let's try it again. Try to explain in a crisp 30-second elevator pitch. What do you do? What are we talking? Crowdfunding marketplace. Crowdfunding is a marketplace business. People who are trying to build products and raise money for those products meet people who are willing to buy those products and are willing to advance money for those products. That's how Kickstarter works. What's different about what you're doing?
This thing here, it's already introduced on the platform. So companies have the opportunity to advertise within the platform with users already on the platform, with friends, and it's a community of products.
What has crowdfunding got to do with that?
The friends are going to fund your purchases.
Sorry, again, you lost me. It's too convoluted thinking.
It's set up as e-commerce and mobile commerce, but you're not paying for these purchases. Your friends are paying for it. This is why it's called a crowdfunding marketplace.
My friends are paying for what I'm going to be buying on this platform.
Yes. And
why is that?
You could also pay with Bitcoin. It's to grow economies, and it's also to fulfill the social responsibilities. You have many areas in low poverty areas. You have people who have a lot of money. You also have people in the middle, and they like to give gifts. So with this opportunity, you also have advertisers. They have the ability to promote their products, and you have new companies with new products. They may create a new market altogether with people introducing themselves and wanting to buy. I could explain with the next slides. I mean, it looks vague. The first slide was just to introduce. Here, this is how it works. You connect with friends, creating a membership beginning with $40. With that membership, it allows users to create a wish list with 20 points. The 20 points then is in their basket, and we collect the other 20. And the friends can view user preferences by establishing a wish list by clicking on want. So if you see this amazing coat that's $800, and you happen to have 800 friends, and those 800 friends each put $1, it's yours. You didn't have to pay for it. How it will appear. All right, you will have a social media message saying your friend's name and your friend wants this. And the gift giving, sharing opportunity. You're the center of this whole platform. And it will ask you, would you support this purchase? Pay as you wish. It could be $2, it could be $50. And advertisers, they have the selling opportunity to merchandise offered in this e-commerce and mobile commerce setting. The selling area in crowdfunding platforms for hosted products and luxury items, beauty, jewelry, shoes, outerwear clothing, sporting goods, home and garden, and to include technology much later. But technology could also be a liability, so I don't want to jump too far into technology.
Okay, so let me actually do this thought experiment with you, and I'd like to request everybody in the audience to do the same. Let's put ourselves in that U circle, right? Each of us, let's put ourselves in the U circle and think of our friends who would be willing to use this service. So now if I put myself in this U bucket, I'm looking for friends who needs the money to buy expensive things, perhaps. But I can't think of people in my friend circle who would do this. And part of the reason, I'll tell you what is the psychological barrier here, is it will hurt their pride.
It doesn't have to be something expensive all the time. It could also be their birthday. It could be holidays. It could be for fundraising events.
That's a very different issue, right? Birthday, holiday, then you're talking about a gift-giving service. A gift-giving service is a very different thing than something where you just generally put a wish list together and buy things for other people.
If you have, let's say, if you have 1,000 friends, you're going to have at least 20% birthdays every month. So that puts you into a high threshold of giving gifts. You don't
I don't give gifts to 1,000 people. I wouldn't even think of giving gifts to 1,000 people.
Well, if you have 1,000 friends, I'm hoping that they're really your friends. And
no, they're not.
20%, okay,
they're
well,
not.
20%.
Who has 1,000 friends that they give gifts to?
You don't have to give. You could give, if you want to get a gift for yourself, it will be advantageous for you to give a gift as well, because you may have something that you may want. You don't have to donate.
But I don't want to fish for gifts from other people. See, I'm not resonating. Okay, hang on. Let's take me out of the loop. I would like a volunteer from the audience who's willing to play this, role play this with us. Is there anyone in the audience who resonates with this concept really strongly? Please introduce yourself in public chat and let's role play. Anybody? We don't have a volunteer from the audience who resonates with this? Okay, Eric Bryan says, I'm very sorry, but I don't really understand the concept. This is the problem, Jai. It's, people are not understanding what you're trying to do. I have understood what you're trying to do, but most people seem to still having difficulty.
I think if we go further along on the slides, people will understand. It's pretty much set up, it's a morphosis of Facebook and Amazon.com. When I'm on this site, I will see, first of all, I would set up the interests that I want. If I have clothing and shoes and technology, I'm going to allow that. It's going to connect me with other friends who have that interest as well. If I have someone, it's their birthday, and I see such and such wants this, and it's something for $75, if I have $50 in my bucket, I'll spare them $1. It's up to the other friends to get something too. Maybe they have 80 other friends that wants to put $1. And if eventually it's free, it's theirs. Then when eventually they will see in my wants, it will come across their page if there's an interest. I may like something for $15. If I have 5 friends that give me $3, it's mine. I could give them a thank you. I could give them, I could just show a reversible support. No one has to give anybody anything.
So you have to find, Jai, you have to find a segment which resonates with what you're trying to do. The possibility that strikes me here is maybe kind of like late teens or college students kind of segment may resonate with this concept. But they're doing it within their peers. I don't think they're necessarily doing it in your concept of people who have money giving to people who lower income people. I don't think that works. This is a peer-to-peer kind of,
I believe this works with, sorry, go ahead.
Go ahead.
I believe this works with anybody because, for instance, in my age group, from a diverse age group from 35 to 60 years old, if I like a Rolex and I have 1,000 friends and they put $10, I have a Rolex watch. It's really not that complicated. I mean, then you have a college student that needs school supplies and books. They have 300 friends. Each person puts $1.
It's obviously you believe in this concept, which is why you're trying to do it. There's no question. But the reason we are trying to get validation from other people is because other people are not buying into your concept. And that is what happens to entrepreneurs when you're trying to do something new and different. You have to find a segment that resonates with your concept. Here, Nirav Jain is asking a very good question. Is this concept live in the market? So if you believe in it that much, do you have validation? Have you put it out there, and do you see something is happening, something like this is happening?
I have plenty of validation. As I go along the slides, we will see. And the target audience here, you could go on to the next slide. All currency should be accepting, and this will be available. My intention is to have it available in the U.S., Europe, and Asia, specifically because Asia has the highest level of online shoppers. And they also prefer to make purchases on smartphones, and they have a growing demand for diverse shopping methods. Over 63% of mobile users in Asia will be purchasing over their mobile accessories. Now, Bitcoin and blockchain is also becoming a huge revelation on Internet of Things. It's also the opportunity to grow the currency in Bitcoin exchanges. And in the event that this does come to fruition, I will not be the Bitcoin expert, but to the next bullet, it's also an opportunity to enable economic growth and visualize data. And next slide, please. Programming and web development. I would like to begin with the smart prototype and pivot to make smart and reasonable accommodations. For instance, to create like pages to begin a larger marketing presence. Analytics, customer relationship model structures, and the customers will always be the primary goal. And security, it will always have a secure checkout process because we're dealing with people's accounts. Next slide, please. Okay, with the privacy settings, once this is set up and you have obtained your membership, you have the preference to enable and disable the user accommodations. For instance, the privacy options. Not everyone would have to see you once. You could only segregate it to people that you want to share that with your real friends, for instance. Next, please. Okay, the membership process. It's $40, and the 20 points goes into your cart immediately. You receive 5 points on the first invited 2 members. So that's really $5 for you. After 1,000 points, you receive 50 free points. The more friends you have, the more buyers for your wish list. Instant access to top designers and labels. Great for year-round, birthdays, anniversary, and holiday spending, and promotes community. Now, on the the B2B end, the advertisers and merchants, they may advertise and promote brand. Availability instances on Shop for Me is a low premium monthly charge. I haven't really decided on how much I would charge them. And a great promotional tool for new and upcoming designers and products. And final point, excellent for credit card merchants and economy consumer confidence. Next page. Okay, this is the growth plan. This is why I find this to be a very marketable and profitable venture. There are approximately 150 over a billion users on Facebook alone. That's just Facebook. And the amount is tripled on overall social media presence. Twitter, Tumblr, Pinterest, including Instagram. This is my prediction. For every 6 months, for instance, there will be 1,000 users added to Shop for Me, and this population will triple. So with the 1,000 users a month, there's the $40 membership. So that's $40,000 profit each month. Now the goal is to have over 11 million users times the $40 membership, which gives an outstanding amount of profits. And this is, I actually underestimated, and this is the amount. I would like to scale the marketing through leverage, like word of mouth, through celebrities with like a huge amount of users. Like, for instance, Kim Kardashian, I will let her market this on her game. I will let her market this on her page to reach other people who don't really have the money to buy things or buy books, to buy anything that will make them feel good about themselves. They could show that this is a community where this is useful. And also to other people's followers. You know, you may have only 20 friends, but someone else may have 1,000 friends. You may be introduced to a whole new network entirely. Next page. The executive plan. The initial purpose of this startup business venture is to formulate and develop a cohesive consumer-to-consumer and business-to-business marketing and profiting hub. There are several competitive persons and startup businesses may utilize this platform. For instance, equity and the purpose of growing expansion. When this does become a success, when I do build this and I do have all the resources, this includes talent and a host of other important resources to build and scale a business, I would like Facebook or even Amazon to buy this. I would like to make an exit, and this will be used on Facebook itself, where the user's already there already. I will be leveraging off of other people's users. You know, Facebook can really profit off of morphing into an Amazon marketplace. You know, so this will be useful for that purpose.
All right, Jai, there's a lot of very good points in the public chat. You may want to take a look at that. A lot of people have weighed in on your business, including you know, suggestions on where they think it's going to work. Like Maureen says, it may work with siblings, her sisters, and she once shared clothes when they still lived at home. Eric Bryan says he can see this maybe works with very close friends, not just people in my Facebook or Twitter network. Eric Bryant also says, okay, I see what she's talking about. She's thinking of a crowd-funded gift service. Basically, she just needed to maybe explain this more succinctly. So that's one of the feedback you're getting over and over again, is that you're not explaining this very well. You need to work on, you know, making this a much clearer presentation. Liz Crosby says, I can understand the wish list concept, but the giving points to anyone who isn't in the immediate circle. But this is gift giving, not just for shopping. This seems terribly American. Anyway, so you can go through the feedback in the public chat. My primary feedback to you is that you need to find a segment where this resonates. It is not a broad solution. It is not going to work with all segments. As you can see here, nobody resonates with you, and there are tons of people in the audience here. Not a single person resonates with you, except in small, you know, it's like, yeah, maybe we'll do it in a 5-sibling situation, or with 5 close friends maybe supporting each other. But
this is what I
not with 1,000 friends.
Yeah, this is what I expected to gain from this web chat, because I have a perspective of the U.S. and Europe and China, and they all love it. You know, people, they cannot wait. They say, you know,
well, maybe you know something that we don't. So just make it happen and prove everybody wrong. That's exactly what entrepreneurs do. I do not for a minute claim to know everything, and I don't think anybody here claims to know everything. So, you know, maybe you know something and you have an insight that we don't, and maybe you have insight into certain demographics and behaviors that we don't, and maybe it will work. So,
but I really appreciate the India feedback, because as the Prime Minister,
this is not just India feedback. Eric Bryant is not in India. Eric, where are you located? Liz Crosby, I don't think, is in India at all. Where did you get that this is India feedback?
I mean, this is a broad market. I had other
It is
feedback
a broad
from other
market.
places.
Altinbek Orumbayev is dialing from Kazakhstan. Eric Bryant is in the U.S.
I was going to continue with India and Asia. I am looking forward to other feedback as this is helpful because I have not spoken to this market yet.
But you don't mistake country as the only segmentation that you need to work. Do you understand segmentation? Segmentation is something that is
I'm just
vital to your business.
I understand that. I'm only making it brief because it's but so much time you have to speak. But I got on this end here because I want to listen to everyone's feedback. Everyone's feedback is very profitable and measurable. But at the end of the day, I have to put this in a demographical area and know where to market this, which is my major people will be like Facebook users. And the majority of those users, which are over 1 billion users, I don't find this to be a small group situation.
It is not a billion Facebook users are not going to do this. Trust me on that one. That I can tell you. I can write it in bold red and tell you that billion Facebook users are not going to do this.
But if 20% do it, that's enough.
20% is a very, very big overassessment in my opinion.
But the point is to prove wrong. And
yeah, so absolutely, you're going to prove everybody wrong, and that's fantastic. Just that's a good attitude. However, you are going to need to be very disciplined about figuring out which segment is willing to do this and figure out. Your assumption is that segment is 200 million people. My assumption is that is a overestimation. Doesn't matter. You figure out which segment is going to do it first, and then you can figure out what is the size of that segment.
I just went into the psychology of it all. This is really a bad economy for many places. Many people do not have excess money to splurge or buy their own money, buy their own products.
Yeah, but you're setting a quid pro quo. If somebody gives me money, I'll have to give them money back. So this doesn't buy me anything.
You don't have to. But
you have to. The psychology of this is you have to. If the first time I give you money and you never support my purchases, I will never give you money again. You will see that is going to be a requirement.
But you have the choice. And the psychology behavior.
It is not a choice. It's a peer pressure. There is no choice really. You know, this is kind of like you scratch my back, I'll scratch your back kind of psychology.
But I have a positive outlook on that. I don't really think the users will be thinking negatively and still upset if someone bought them, contributed $1, and someone else didn't do that for them. They would just move on to someone else that they have closer in their relationship. You know, you're not obligated to shop for someone or feed someone else's cause that you're not.
All right, Jai, we've spent enough time on your business at this point. I think you understand the pushbacks. If you need to, you can go replay the recording once it's on, and you will have a chance to address these concerns. The only thing that I suggest to you is that be open about receiving the negative feedback, because that's something that helps you question your assumptions.
Okay, definitely. Thank you very much. I appreciate you having me on.
You're very welcome. So, folks, we had a set of slides from Emerson Cabezas in Colombia, but it doesn't look like Emerson is dialed in, so it's probably technical difficulty or whatever. So we will move on, and I'm going to spend a few minutes explaining to you how to use 1M, and then we'll do open Q&A. So line up your questions, and we will do both public chat Q&A as well as if you want to dial in and talk, we can do that as well. We'll have plenty of time to do Q&A. So first, let's just spend a few minutes explaining 1M. Now, I'd like to ask you, what did you think of the session today? There was a fair bit of contentious back and forth. Does that bother you? Does that frighten you? As an entrepreneur, to be to engage in that kind of process, does that frighten you? Give me a yes or no. Liz says no, Ram says no, Raju says no, Eric says no. Pradeep, no. Nirav, no. It helps. Yes, that's exactly the point, and I'm glad to hear Nirav say that, because the point is we are trying to move forward and we are trying to examine the assumptions and see which assumptions stand the test of this kind of scrutiny, right? And that's exactly the process. So you have to be intellectually open to back and forth and be somewhat comfortable with a little bit of conflict if such conflict arises, because conflict actually is a huge growth mechanism. You know, this week there was an event in Silicon Valley, and it was a group of women executives on Steve Jobs' Apple Macintosh team. You know, there's a new Steve Jobs movie that Aaron Sorkin has written, and it's directed by Danny Boyle. It stars a character who's one of the, Eric says he's seen it last weekend. Has anybody else seen it? Would you, are you following any of the stuff that I'm talking about? So it basically talks about three behind the scenes. It goes behind the scenes of three product launches: the first Macintosh, the next Cube, and then the iPod launch. And there's a lot of conflict and a lot of messy stuff going on behind the scenes of these launch. But then the launch comes out to be a really powerful event, and Apple has always been known for Steve Jobs' product launches. Now, one of the comments that Joanna Hoffman made at this event this week is that there was always a lot of conflict around Steve Jobs. And he encouraged that conflict because that conflict actually made new things happen, new ideas come into fore, new things happen. And the reason Liz says it takes pain to give birth to anything is absolutely right, Liz, bang on. And the reason, we as the 1 million by 1 million team have kind of created an ethos of honest, direct exchange in these roundtables is with that same philosophy in mind, is that we should be able to engage in a safe, intellectually honest discussion here about our businesses. I have nothing against any of you. And I imagine none of you have anything against me. So we are here in a supportive, frame of mind, trying to make positive things happen, trying to make projects move forward and, progress happen. And I believe that that is only possible if we are willing to be open and honest and perhaps, entertain possibilities of conflict in these sessions. So I'm actually very happy that today's session turned out the way it did, and there was some amount of conflict, and you were able to absorb it. I'm not sure how well Jai absorbed it, but it looks like Nirav absorbed it well. But Jai, if you're still listening, I would encourage you to not be defensive about the feedback you got here, but take it more in the spirit of things and see where these objections are coming from and what can you do about it. Okay, so with that, if you like what we're doing, please recommend Serious Entrepreneurs to 1 million by 1 million. We want to work with more entrepreneurs. We need to work with more entrepreneurs to meet our goal of really achieving huge amounts of, economic value building. That's why we are doing this. This is really an economic empowerment, entrepreneurship development project. All our resources are at 1mby1m.com. We're a completely virtual program. You'll find a blog that is rich, inspirational, informative, and extremely educational, and that is free. So please take advantage of that. We try to make it a point to offer you insights there on a continuous basis. We also have the Entrepreneur Journeys book series, of which there are 12 volumes on Amazon Kindle. The first 4 are also available in paper book formats, and the full series is available in electronic book format. And each of them are case study-based volumes that double-click down on a particular topic. So we have a book from e-commerce to Web 3.0. We have one on cloud computing. We have one specifically on bootstrapping with a paycheck, which is a methodology that we discovered in the process of doing this is a way a lot of entrepreneurs are building businesses. And we found that it's a good nugget to propagate out there so more people can take advantage of this method of bootstrapping. So there's a lot of knowledge that we've packaged into book formats, and they're very reasonably priced. So it's a very reasonable entry point into the 1M1M program. The blog is on the website as well. You'll find tons of videos that will answer your frequently asked questions. These roundtables happen every Thursday almost. So in November, we have 2 more Thursday roundtables left. And you need to register to pitch or attend on the free public roundtables page on the website. In the premium program, we have extensive methodology guidance. We have a curriculum. We help you with business development. We help you with we give you strategy consulting, and we help you with financing as well as media relations. So that program, that premium program, is a $1,000 annual membership fee. We really have just a few different options, right? We have the free roundtables, we have the blog, we have the books, and then we have this premium program. That's pretty much the set of options we offer you. There's no other option in the program at the moment, at least. The $1 Million Club is a set of case studies that you'll find that are successful entrepreneurs from the program. The ROI equation is on the website as well. We offer $375,000 plus 5 to 10% equity worth of value for just a $1,000 annual membership fee and no equity. There is a misconception in the industry that equity is free. Entrepreneurs early on in their life cycle give up huge amounts of equity for nothing. We believe it's a wrong way to build a business, which is why we have structured a program that really conserves equity, and that's an important factor to keep in mind when you're choosing a program to work with, that you do not give up a very large chunk of equity for minimal value. That's pretty much it. I'm just running you through a few slides. There's tons of information on the website, tons of videos, etc. You'll find the curriculum that we teach has over 600 successful entrepreneurs who have participated with their case studies, their insights, their perspectives, and that has helped us build up this curriculum and this knowledge base with which we are teaching you what all these people have learned in their journeys. So it's a very, it's very inspirational actually to walk through these journeys from zero to, to build millions of dollars of revenue, sometimes to billions of dollars of revenue with these entrepreneurs. The curriculum is what you're going to start with most likely. So today, if you decide that you're going to join the 1M1M program, the premium program, probably the first thing you're going to do is go in and start working on the curriculum. And then next Wednesday, we have a private roundtable. You're going to come into the private roundtable with your questions. Maybe you will come and pitch and a piece of your strategy, maybe your positioning, maybe your market sizing, maybe your go-to-market strategy, and we'll brainstorm and fine-tune that. This is how we work. It's a combination of asynchronous learning in the form of video lectures and case study-based curriculum, and then these online roundtables that are private and members only. Our methodology is lean, capital-efficient bootstrap startups. Even if you raise money, you're going to bootstrap your way to validation. You have to do that. There's no choice. That's what investors are looking for. So that's why even if you're going to go on to raise money, eventually you will have to follow this general process of early validation, early bootstrapping. That's pretty much it. We have lots of presence in the online universe. Our social media presence is substantial. We have, and we give you access to that network, that channel, to amplify your messages as part of the premium program as well. So you can take advantage of that for sure. That's pretty much it. If you are anywhere in the world trying to develop an entrepreneurship community, please feel free to use the affiliate program. We have you know, we are very willing partners. If you want to partner with us, we'll be very happy to partner with you. But, you know, within the scope of our program, if you want us to customize a different program for you, that will be hard for us to do because you can't scale anything if you have to customize stuff. But here, you know, to the extent that you are aligned with our program, we're very happy to partner. So upcoming free roundtables are November 12th, November 19th, December 10th, 17th, and January 7th. I have a bit of travel in between in November, late November, early December, which is why we have and plus there's Thanksgiving during that window, so we have a gap, but other than that, we are pretty much here most Thursdays. Well, that's pretty much it. I think we're going to go to Q&A next. So let's look at what questions and what ideas, what issues are popping up in your head right now that we can discuss here. Eric Bryan says, I can say that I've done a ton of research into incubators, not just those in the US, but in other countries, and yours is the best incubator I've seen. Just your free resources have helped me tremendously. So thank you, Shramana. Oh, Eric, that's wonderful. Thank you for your kind comments. That's very, very nice, and very nice to hear that you're finding the resources helpful, including the free resources. That's kind of our point of providing such a huge amount of free resources, is so that you can cover a lot of your basic learning through those free resources. And then when you decide that you want to engage at a more intense level and go to the next level of mentoring, you can come in and come into the program, and we'll, shepherd you through the more advanced learning. So, questions, comments are most welcome. Introductions are very welcome. Please feel free to introduce yourself. Tell us where you're joining from, what you're working on. Feel free to call in if you'd like to discuss anything. Maureen is supplying a question that came up on Quora, and it's what are the most common problems that destroy a startup? So I want to take one of the issues that I stated up front. Chasing investors instead of customers is the most common way startups destroy themselves. I want to discuss that, actually. In fact, in that context, let's play a little game. Eric says he read this post on LinkedIn yesterday. It was great insight. Good. Thank you, Eric. So how many of you are here today to learn, and how many of you are here today in search of funding? So in public chat, put L if you're here to learn, put F if you're here for funding. Pradeep says L, learning. Ram says L, Nirav says L, okay. F, what is F? Jai, what is F? We are doing L for learning, F for funding. Raju says, after attending your session last week, I've bought 5 of your books on Kindle. Oh, so you have a lot of reading to do, Raju. You will learn a lot from those books. Alton Beck says L. Jai is here for funding. Eric Bryant is L, but used to be F until I became acquainted with your methodologies, Romana. All right, good. Raju says L. I guess you put a lowercase l, but that's still L. Jai is the one who's here for funding. So Jai, if you are looking for funding for your concept, you're going to have to prove traction, prove validation, and prove traction before anyone will fund you, especially with B2C concepts. Investors expect to see a lot of traction before they will fund it. So if you go out chasing investors right now, you will get nowhere. So my suggestion to you, if you allow me to give you one, Jai, is you do have a lot of learning to do. So if you can actually make the switch that Eric has made from F to L for at least some time and really make some progress in terms of building this business and proving your assumptions and showing validation of all of your assumptions, the F part is going to be more viable. Right now, the F is not viable for the situation you're in. I hope that doesn't offend you, but that is the honest truth. Investors are not interested in research and statistics. Investors fund businesses, they don't fund concepts. Eric says his startup has 1,100 users and 8 customers, and we are not fundable by any investors we've approached, and in fact, we may never be fundable, which is now okay with me. All right? That doesn't mean that you cannot build a successful business, Eric. You now, having studied some of what I'm saying, I assume that you understand entrepreneurship equals customers, revenues, and profits. Funding is optional. Exit is optional. Pradeep Ramasetti says, my name is Pradeep. We are App Analyze. We help companies to optimize IT security on software-defined networks. How good is it to get into paid partnership programs with big companies for which you are building solutions? Paid partnership programs. Which companies are we talking about? Cisco and VMware. I don't know. It depends on what they're offering you. It really depends on what is the value proposition of the program. How many leads are they going to generate for you? It's hard for me to say without actually studying the programs, the specific programs that you're thinking of getting into. Anybody else? Questions, comments? Nirav is asking, does brand loyalty work in e-commerce in India? I think it does. I think brand loyalty works everywhere. Your proxy for brand loyalty in India is the concept of all the consumer brands that sell, right? If you look at beauty products, people buy Lakme. Why do they buy Lakme? Why do they buy any other brand? Because of brand loyalty, because they trust a brand. So I think brand loyalty works all over the world. If you're selling a commodity product, though, that is not a branded product, and people can get it from multiple different e-commerce retail sites, they'll go for the price, the one that offers the best price. And so the retailer's brand, if it's a commodity product, is not going to help you sell if they can find it for cheaper elsewhere. Do I answer your question, Nirav? Raju is asking, what are some innovative ways of lead generation? Well, this is a very, very long discussion, Raju. We have a full, extensive customer acquisition module that treats lead generation and various nuances of lead generation in gory details in the premium program. So if your primary issue is customer acquisition, lead generation, and so forth and so on, happy to help you, happy to, coach you both through the curriculum as well as through further mentoring based on that basic knowledge. It is I did a startup. My second startup was a lead generation and qualification startup. So it's a subject that I've studied ad nauseum for many, many years. That startup was at the end of 1997. So it's been many years that lead generation has been a hot button and hot topic in my life. I know a lot about this subject just because I've been swimming in it for so long. Altin Beck says, I'm curious to know what kind of casts for bone healing are popular in India. I don't know. Does anybody in the room who's from India know what kind of casts or bone healing are popular in India? I don't know the technicalities of how to answer your question. When I look at a caste, you know, when I was a kid growing up in India, if somebody broke something, they were given a caste, but I have no technical knowledge to know more than that. Any other questions, comments? Pradeep Ratam Sethi says, putter bone setters. There you go. There's a, I guess that is a technical feedback. Eric Bryant wants to say something to Jai. I just want to say to you, I really appreciate what you're trying to achieve. I'm also in New York. I personally support all women in tech. Don't be discouraged. I know it's hard to receive negative feedback, especially when it's your baby. I'm just like you. I get very protective over my baby. I admire your courage for presenting your ideas. Very nice, Eric, and it's absolutely correct, not just for women in tech or everybody who's, you know, courageous to present something and discuss their ideas and is open to receiving feedback. Don't get discouraged. The whole point is how to make you successful. How to, you know, an idea is like this raw slab of stone. You're going to be Michelangelo and pull out your David out of that slab of stone and of marble. So that chiseling, that, you know, shaping of stone is what is going to become your sculpture, and that sculpture is your eventual successful startup. So we are in that process. We are in the very early stages. This program is working with people who are in the early raw stages of your process, and you have this huge stone sitting there, and you've started chiseling away, and you know, maybe a little finger of your David is starting to come out, but we have a long way to go, and we are here to be with you in that journey if you choose to travel that journey with us, and to the extent we can help you, we will help you. So Jai, the other thing that you're going to need to get used to is that we live in a massively online world, right? Whether it's mobile or web, we live in a massively online world. The learning opportunities out there online today are vast. So take advantage of those learning opportunities and get used to non-face-to-face mediums. And you're going to learn a lot, and you're going to get a lot of leverage by being able to take advantage of these things. It's just, you know, learning has become so much simpler. You cannot imagine when I was starting my first startup in 1994, there was no internet, right? We are the generation that came into the internet, you know, that our generation is what built the internet. So we didn't have the internet to start with. We didn't have all these online learning opportunities available. So you cannot imagine how much harder things were at that time. Okay, folks, we've kind of gone over time by 4 minutes. I try to finish the session by 9:30 usually, but we'll be here again next week. We look forward to seeing you. I want to introduce you quickly to Irina Patterson. If you have any questions about the program, about the premium program, please feel free to contact Irina, and she will point you to answers or give you answers, whatever. She will address your issues for sure. Send her an email, irina@1mbym.com, and she'll get on the phone with you if necessary, or on Skype. So Ram Rangarajan says we have started a company in Chennai for design, development, and execution of IT infrastructures, IP, CCTV, fire safety, and access control systems. Very good, Ram. Please feel free to come and present in one of the upcoming sessions. You're very welcome, all of you, for coming, and it was a pleasure spending the time with you today. And as you know, this is a working session. Look forward to working more with you over the course of the next sessions. And if you join the program, then in the premium program as well. Bye-bye, everybody. Talk to you soon. See you on Twitter. That's right.